Well, hello traders and investors. I'm LA Little and this is your daily NeoTA wrap. We take a look at these markets, doing it from a neoclassical perspective. That means each day we look at these charts and we ask ourselves, what happened today and what might it tell us about the coming ones? We do a show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube and it's under the channel LA Little. If you want to subscribe and you haven't, just reach up in the right hand corner, do so. Anytime I push content, you'll get a notification. As far as what happened today, well, did kind of what we taught yesterday. If you remember, we were going through the charts. Indexes looked pretty good here in the US. Then we got over to Europe, and then all of a sudden we found some issues. And of course, Europe has a big effect on us. And when you look at the numbers in Europe, you saw the sell-off. So we kind of got what we thought, right? We got sell-offs here, the FTSE, not so much the SMI. Where's the CAC? There's the CAC up there, 0.83. And then I'm not sure where, somewhere, if I keep scrolling down. I guess I don't have the Swiss market on this particular board. But anyway, that led to pullbacks in our markets. That was what we thought might happen. And so we got a little pullback here, 0.86, 0.62, 86 on the Russell, 0.62 on the NASDAQ NDX, 6.6 on the NASDAQ itself, and a little over 0.5% on the S&P 500. Nikkei trading up a little bit tonight. It looks like gold actually spiked and gave most of it up. It did finish up 0.5%, but not that big a deal. The oil market also pushed higher. The big story today was the standout in the currencies. The currencies actually got things going. And what typically happens anymore is when this dollar sells down, right, that pushes the Chinese market to the upside, and it pushes the European markets to the downside. It's not just Chinese, but in general the Asian markets outside of the Nikkei. And so those markets benefit from a stronger dollar, a weaker dollar. The European markets are hit by that because that drives their currencies higher, and that's the same with the yen. So I believe if you just remember that small little relationship there, that will give you an advantage in terms of what's happening in these markets and what you're seeing. Let's pop up. Matter of fact, let's just start with the world markets. I'm going to go over to Europe again. Europe was where we saw the problems last night. Let's see what the trading did today in that area. So we got a little bit of a pullback. We're back into the big bar, and so that the price span on this wide price spread bar on August 9th, 10.7 down to 10.43. So it was a very wide price spread bar, and if we see it get all the way back or get a little bit deeper, about halfway in to that bar, right, then we could see it try to come back to the back side of it. Now when we got the breakout here on this, we didn't get a retest regenerate, and in a way that's a good thing because now you have this bar sitting down there. And if you count them, you got 1, 2, 3, 4, 5, 6 bars already, right, before the retrace. That means that when you come back to do that retest, regenerate, that's bullish, odds are this thing's going to spike right back up off that test. And so as this comes back into this high, which is 9720, that's what you should be looking at. Odds are pretty good that back into that high and then actually back into all 3 of these highs that you see on the charts. There were 3 that were broken. You got one here, there, and another one over there. As you come back into those, you can expect this market probably to get bought as a result. So that's where the pullback, if I'm looking for a retrace, that's where I'm looking for the buyers to step in. CAC's not nearly as clean. It actually doesn't tell me much anymore. It just kind of goes with the flow and just does a little bit weaker. The FTSE, of course, has benefited from a continuing devaluation of the British pound off the Brexit news, and you've had, look at all the arrows here. This thing has spiked and spiked, and yeah, you can get a little pullback, but it's probably going to continue on. And the reason for that, of course, is pretty simple, and that is that it keeps getting devalued in terms of currency, which drives the equity prices higher. We've seen that over and over and over. If we look over here at the Swiss market, which has been my best tell for a good month and a half now, you got a swing point high, went up and tested it. Remember last night we were looking at it and said we failed. We did fail on lower volume, which was quite surprising because that volume was low there. Actually, I think it was lower. Let's see. 25.9, and you just barely had more, 26.1. So when it's that close, yeah, I can test it again, but it doesn't have to. Comes off, right? I don't know what the volumes are. Unfortunately, I'm not getting those volumes. I'm going to have to put some programs together myself to go get them because I can't rely on the vendors to get them to me quick enough anymore. But we do come off, and that looks like that one can pull back some more too. So in Europe, at least, it looks like if we want to pull back, if we go over to Shanghai, right? Shanghai benefiting from that stronger dollar, gets a nice big pop up, breaks a swing point high. So if we draw them in, actually broke 2. So you had this wide price spread breakdown bar here, right? Plus you had the little swing point high up here. You get over them, right? Volume expands. This is exactly what you want. Tonight, you do an over-under. In other words, you get over it, back under it. You have just a little bit less volume, nothing heavy, but that says it can retrace back down into this little area down here. Now, I suspect if you get a little bit farther, that's in fact what it's going to do. Otherwise, it's going to hold up and try to push higher. Let's see what the weekly looks like on this thing. So, you know, Japan has, not Japan, but Shanghai has suffered a crash of proportions, large proportions. This is the monthly, right? Big spike up. You do a spike top at the top, right? Over, under, less volume. Actually, you had more volume, and you come off with that volume. You continue down. You get your bounce. Then you get another breakdown bar. Now you got another little bounce going. And actually, right now, you actually have a little small ABCD structure going. When I say small, that's because we're on the monthly time frame. But that can get up a little bit higher, maybe 2,300 or so it looks like, just eyeballing it. Let's see what the weekly looks like. And here, looks like it's going to break a swing point high. That high is 30.97. Tonight we're trading at 31.10. So if they get it to the end of the week still breaking it, then you can get more of a lift. Just like before, though, I suspect where the issue is going to be is the top of the breakdown bar, the bottom of that swing point low, that area in there, and then, of course, right up above it. So, yeah, if this gets a little bit more juice, breaks that swing point high, if the dollar continues to fall, then we're going to see the Shanghai probably continue to do well, which if you're interested in those markets, that is a place to look. Let's see about our markets. Let's see what kind of damage we did today. I don't think we probably did that much, really. I mean, we've been up and up and up, so to get a little pullback, probably not going to do much damage yet. Let's see what it looks like. And so if we bring up the S&P 500, get it on the screen here. So we come off, so the swing point high, 2175. This high of this breakout bar, 2182. And the volume on it's the heaviest at 36.6. Tonight we get into 2178, so we're not quite there, but getting close. Looks to me like another retest, regenerate on the bullish. Now, this would be the second time back. Now, the problem is on the second time back, your odds are not nearly as good as they were the first time back. You had about, on this particular setup, you had about a 62% odd that would bounce. Now you're going to have something closer to about 50, probably about 54. I'd have to look at the numbers, but somewhere around there. So you're getting back in closer to a coin flip for this little area to hold. Now, if it doesn't hold, you got swing point lows back underneath. That could lead to a faster move to the downside if we get there. So I think a little danger brewing here, nothing spectacular, but a little bit, so it's not to be totally ignored. NASDAQ comes off a little bit. NASDAQ's got a nice little gap area support around 51.85. Look at the NDX. Let's see what that one looks like. It's probably about the same, and it is. Got the exact same structure as the NASDAQ. Finally, if I move to the Russell, so the Russell now, Russell finally tells us something. Russell does a takeaway bar. So what this means is you go over, or actually you don't go over, but you take away all the gains from yesterday, every penny of it. take it all away, so all the goodness that happened just got ripped off, and you're back down, right? So that means you can come back into this bar, right, and continue on down. And now here, look, you got the same sort of thing starting to set up here too. So we've got some structure starting to form here that may give us some problems a little bit down the road. You're going to have to keep your eyes on that. Let's go to the currency market because that's where the action was today. I want to see what kind of damage it did to the dollar. Let's pop straight to the dollar, see what that looks like. And then we'll come back and look at the euro and the yen. Now the weaker dollar is really good for the commodities, and you definitely got a weak one today. You break under a swing point low, volume starts to escalate a little bit. That's not a good thing for dollar bulls because I don't see where the bottom is on this. And that last night, if you remember, we were wondering about the currencies, trying to figure out what they might tell us, and they really weren't telling us much last night. Now tonight, you got a break on a swing point low though. That tells us a little bit more, and that is that the dollar is under pressure and could continue to be under pressure for a little while. Let me see what the euro and the yen look like, and we'll look at the pound as well. Here's the euro, gets its breakout over a swing point high, and nothing special on the weekly, but it can travel farther as a result of what it's doing. Japanese yen, now the yen is the big one, and now the yen's getting over the swing point highs. Same thing here on the weekly, and the monthly is the key bar. 50, what is that, 96.14. 96.14, you're over it. Now this is on a monthly though. This is a bearish retest regenerate. If they do get over this, it's going to change the picture on the yen. So in other words, what has been in effect for quite some time now is going to be called into question, and that's going to be an issue for anyone that wants to be bearish this. Now, you had the move down, continuation move down, now you got the move back up. Typically what you see if this is going to get higher is it's going to break the swing point high, it's going to get over that retest regenerate zone, maybe squeeze up to this one before it's done, and then get some sort of a pullback. And it's that pullback that if it is bought into this area, then you get that push, and this whole move down is destroyed. And believe me, that is not what the Japanese officials and central bank want to see, because that puts significant pressure on them to do something more. And believe me, they've thrown everything but the kitchen sink at this yen and tried to kill it, and now you see it rising again. I wanted to look at the British pound because I saw the pound was trying to bounce. Got a pretty decent bounce today, and I don't know, that doesn't really mean much. So those are the three main currencies. And just quickly looking at the Swiss franc. Yeah, that doesn't tell us much either. So I'm still a little bit out there wondering how much farther we're going to get down on this dollar. But at this time, that's helping commodities, and it's hurting most other things. Of course, weaker dollar hurts Europe, helps Asia. So what do we got tomorrow? If I look at this and try to get a stab at it, it looks to me like we're probably going to see this market try to get into that retest regenerate, and then we're going to see what it's made of. And up until now, for 2.5 months, almost 3 months now, every dip has been bought. If it isn't this time, and if we really do get a push down below this retest regenerate zone, it definitely would change the character of this big move that we've seen. Remember, the ABCD structure came within a point, so you can more or less say that's done. Yeah, it could go another point, but you got the vast majority of the football field covered there, from the the 1 yard line to the other end zone. So the question here is, what kind of retrace we get, and do they buy it? My take is we will retrace some more tomorrow, a little bit, and we'll see if the buyers come out. And I don't have a reason to doubt that they will. Right now, you just have to assume they will. But if you don't get a good bounce out of here and you leg forward, I think the next time down becomes much more of a problem. That's it for tonight. Have yourself a great one. Come join us here at TA today. Get started with us. We do teach you, and we give you great portfolios, over 7% this year so far, and we're positioning for a lot more. Riding some pretty good stocks right now. Have a great night. Good night.